Hi, this is Editor's Take. I'm Sakshi Batra and I have with me Gaurav Chaudhary. He's the Deputy Executive Editor at Money Control, and we are here to talk about the latest macro data that was released last evening by the CSO on retail inflation front and on the IIP front. Thanks very much, Gaurav, for joining in. It's a double treat for the economy for sure, as the inflation has cooled off and IIP growth has definitely surged now. First of all, let me come to inflation and ask you about that, because it has cooled off to a 17-month low at 2.33%. What has really led to this lower inflation data?
So the headline inflation clearly is something that the government will be very comfortable and cheerful about, and it also comes within the stays comfortably within the Reserve Bank of India's range of between 2 to 6%. It's about it's far below 4%, which is the Reserve Bank of India's most comfortable, tolerable limit. But there are a few caveats here. First is that food inflation actually is in negative territory for a long time now, and that may not be a good sign. That may not be a good sign. While prices are low for farmers, this is a reflection of low farm income, and this could probably mean the curse of productivity. High and abundant agricultural output has actually led to lower prices, which is a peculiar flux, because if farmers are producing more, they should deserve to earn more, which is not happening, because producing more has led to abundant supplies. That has led to a price crash, and that has led to low farmers' income.
And MSP is also not helping.
MSP doesn't seem to be helping, at least in vegetables, because there is no MSP, and so that is not helping. And if this continues, if this persists, then this is something that will probably worry the government.
All right, and let me come to IIP growth now, because that's definitely a big cheer. 8.1% is what the headline number is of IIP. What has really led to this growth in this data number?
There is one thing that has played out here is a favorable base effect. But I personally, I do not think, going by the headline numbers and also the sub-indices, that this growth in industrial output is going to stay for too long.
Okay.
First, there was a bit of an inventory adjustment in the month of November, and also because of a late start of the festive season this year. That is why I don't think we should not expect this sharp growth in industrial output to persist for a long enough time. Also because the lead indicators, if you look at auto output for November, if you look at electricity output for November, if you look at coal output for November, those are very sluggish, moderate growth. So if you factor those in November and December, I think this is going to moderate a bit.
In fact, this is what I wanted to come up to and ask you that, will this both reduction in inflation and the surge in IIP growth, will this be sustainable at all? Because if it is a one-off because of the favorable base effect, then we'll just have to see whether this growth data that we are taking into consideration will be actually impacting the economy.
Inflation could persist, although for a couple of months, not for too long. And it will also depend on how the Rabi season plays out. And also, there's been a late start to the sowing season, sowing of Rabi this season, because of a weak post-monsoon rain and a lagged sowing. So we'll have to see how it plays out. While inflation could persist for some time, I don't see industrial output to contain, to persist at similar growth rates. The rapidity of expansion is likely going to moderate, because whatever the lead indicators we are getting, auto output is sluggish, electricity output and coal output are sluggish. So if these three are sluggish and the rest of the data are yet to come out, I think industrial output probably will start moderating from January onwards.
Right. But then the most important point about inflation is that it has been undershooting the MPC target for about 4 months consecutively right now. That's some bit of good news. Do you think this will actually increase the chances of a rate cut, or at least change the stance from calibrated tightening to maybe neutral going forward in the next policy?
We have to wait and watch how core inflation behaves. That is non-food, non-fuel inflation that continues to remain sticky. So the headline inflation could be masking a high core inflation rate here. And also, a large part of the moderation in inflation rate has also got to do with low crude oil prices, which actually brought down retail fuel prices, petrol and diesel prices in India. That has actually now flattened out, and with the new OPEC meeting and the deal, crude prices have started climbing, inching up, not really climbing, and that will start reflecting in the inflation data from December onwards. We also need to see, and we have to wait until February before the Reserve Bank of India actually takes a call on whether this warrants an interest rate cut. But one thing is for sure is that the government will be a little worried about very low inflation if it persists for too long, because low inflation can also mean low economic activity, and that is something that the government will keep one eye on on it.
Do you expect the government to actually step in to actually push up these prices for
No,
farm?
no. So what I expect is that there could be the MSP prices, the execution of the MSP prices, and the way they are being delivered to farmers. There could be a bit of an action on implementation of the new MSP. As we know, MSP prices of 14 cereals
Yes.
have been brought up by 1.5 times, and maybe the government will probably bring in a more stricter oversight of the way MSP implementation is taking about.
And what is your target of interest rate going forward in the next policy?
I think the RBI will maintain a status quo, and probably they can change the stance from calibrated tightening to neutral.
Okay, thanks very much then, Gaurav, for sharing all that insight. Well, the headline numbers are definitely cheerful, but underlying, reading between the lines could be warranting some bit of caution as far as the farm income is definitely concerned. However, the growth numbers also will need to be seen, as this was a push-up because of the favorable base effect. Will this be sustainable is the question going forward from here. Thanks very much for watching us in this edition of Editor's Take, and do stay logged on to moneycontrol.com for more news and updates. Thanks for watching.